Can I request Navin to please come on stage and moderate the panel discussion? In this discussion today, we have three speakers, like we mentioned earlier. May I first invite Mr. Navneet Munot to come on stage. Navneet is the Chief Investment Officer at SBI Mutual Fund. With over 2 decades of investment experience in our capital markets, he certainly becomes an ideal speaker whose views we will want to listen to and understand carefully today evening. Navneet, welcome to the show. May I now request also Mr. S. Naren to come on stage. Naren, too, is an eminent speaker and currently serves as the Chief Investment Officer at ICICI Prudential Asset Management Company. Over 2 decades, almost 24 years of experience in this capital markets after having done his BE from IIT Chennai and his MBA from IIM Kolkata. Naren, thank you so much for being part of the evening. No panel for us is, of course, complete without Mr. Raamdeo Agrawal, Joint MD, and the legend at Motilal Oswal to be here. Thank you, Raamdeo ji, for also being part of it. Navin, all yours.
Okay, so let me kick this panel discussion off with a quick question to all our panelists. I'd like to start with Naren. Naren, what does this modified era mean to you? How do you look at this? We've basically come from a background of 5 years of very poor macro, GDP growth, industrial growth, fiscal deficit, current account deficit, inflation, interest rates, everything that could go wrong went wrong with the Indian economy.
See, one thing is, I think none of us have seen what is the benefit of a single party rule in the Lok Sabha. I mean, I started working in 1989, and 89 was the first year where you had a coalition government. Until 2014, May 16th, I've had a coalition government for 25 years. So one of the reasons why we are not able to understand at this point of time is that we have never seen a government like this. Right. So I think what decisions can take maybe months can maybe happen in weeks. And so I think we're going to see that benefit. The problem is we are in an internet era, so we want something to happen, what has to happen in 3 years, in 2 months. That sometimes can be a problem, but otherwise I think we are headed for the most interesting period in my working career, and we are in a sweet spot even from a global point of view. Because when we meet people across the world, they say India is possibly the only country in the world whose growth can go up significantly and interest rates can come down significantly. Either there are countries whose growth rates have increased, like America, but where interest rates could also go up. Or there are countries like China whose growth rates will come down, could come down. So I think we are in an extremely unique position, and what we have to remember is this is from an economy point of view, and not necessarily from a market point of view. Right. And that distinction is something I think we will realize over the next 3 years, because I don't think the most important imperative of this government is going to be the market. It has to be creation of employment, it has to be reduction in inflation, and it has to be reduction in interest rates. So I think these 3 objectives is what the government will look for, rather than look at whether the market goes up today or market goes up tomorrow. I think that distinction is something which we'll realize over a period of time. I think there is better realization today than what it was, let's say, 2 weeks back. And I think at the same time, I think the 3-year outlook on the economy looks really good.
Right. So you think the worst of the macro is behind us anyways?
Yeah, that is clearly behind us. I am expecting double-digit industrial production growth, and I'm expecting interest rates to be 2% lower and inflation rates to be 2% lower in the next 3 years. So obviously the worst of the macro was over last year in July, August. Because if you see what the current account deficit was at that point of time and what the current account deficit is down now to, I think clearly the worst is over on a macro point of view.
Right. And Navneet, what about you? What does modified era mean to you?
So in a world which is dealing with structural issues and trying to solve with cyclical solutions like printing more money, I think the problems that you talked about in case of India were more cyclical problems. The structural strength stays. So in Modi's words, I mean, India has got demand, India has got democracy, and India has got demography, and there are very few countries in the world which have got that. What we didn't have was the direction, a devotion, a dedication, and determination. And I think this mandate will ensure that we get the direction and we get the determination. And I think I'm quite positive after the budget that I think it tried to put most of the things which were there in the NDA agenda. So it talked about smart cities, it talked about national gas grid, it talked about e-governance, it talked about more use of technology, reviving the traditional industries, new airports, new ports, more roads. Now the issue is that given the fiscal constraints, given the state of the banking sector's balance sheet, and given the balance sheet of large number of people who can develop that infrastructure. So what can government do? Government can do two things. One is that you focus on ease of doing business. You put the right taxation regime, you put the right kind of clearance mechanism in place, you put a good redressal mechanism in place for any dispute, you put the right kind of policy framework on one side. So create a climate where whether a foreign investor, so make more clarity on the FDI, do that. On another side, ensure the funding, because the funding cannot come from government, corporate sector has issues, and the banking sector has issues. And for that, large number of steps have been taken. So right from REIT for the real estate sector, the infrastructure sector investment trust, or lower withholding tax for the foreign investors, trying to get more domestic savings into the market through the, let's say, more limit for ATC or uniform KYC. And also, I think this the issue of infrastructure bonds by the banking sector. So you're trying to address the funding issue, and you're providing the right framework with a good execution capability. I think we are going to achieve that. So my sense is that next couple of years, India will produce an economic miracle which is unparalleled in human history.
Do you want to elaborate on that? An economic miracle that is unparalleled in the history of India?
Yeah, because first of all, I mean, as Naren rightly said, that in 30 years, we never had this kind of a mandate. This is a new India. This is those, 110 million, 120 million new voters, aspirational class. So we have moved from that caste politics to class politics. And I think every state government chief minister, so it's not only the one single government in Delhi, but I think the message has been very clear to chief ministers that focus on growth, focus on governance on the ground. And I think the whole political class will realize that how can development is going to be the single biggest political agenda. And also in terms of, I think those structural strengths are very much there. So we have the positive demographics. There's tremendous potential in the manufacturing sector to grow. And there's tremendous potential in terms of improving our productivity on the agriculture side. There's tremendous potential even on the services. So for example, tourism. I mean, all these things have been talked about in the last 1 or 2 months. And I don't see any reason that given these strengths that we have, just with the right kind of direction, and the world is looking at us, where else on earth you've got this kind of combination, this kind of opportunity. In next couple of years, why would, let's say, an Alstom or a Siemens or an ABB or Metal, wherever they are sitting, would not look at this place as the next big opportunity? China has got serious issues with its property sector. In US, in Europe, in Japan, large part of the world, I think whether it's aging, whether the structural issues are there, I think this is one place where the growth, which can actually drive the global growth for next several years. And I think our corporate sector also has made lots of, I would say, the right kind of steps in the last couple of years, right from selling the non-core assets, getting the balance sheet right, investing more in terms of improving the productivity. Hopefully, would be able to participate in this the next step of the nation building.
Very exciting. Raamdeo, how would you look at the budget? And there was very limited time that the government had to put this together, just 7 weeks of time. And the markets have been quite volatile after the budget has been presented. How do you see what has come about already, and put that in the context of what you think could come going forward, from this government?
Yeah, I would because this is a budget first statement of policy or intent. But look at what is the mandate. I mean, from where Naren started. See, this is a, one is that it is the first time in 25 years. Second is the kind of guy you have mandated. See, like, we are freaks in stock market. You are passionate about stock market. He's passionate about politics. And a passionate guy, mad guy can do anything. And he's passionate about becoming a statesman. I mean, go down the history to be the best prime minister in the world. I mean, best prime minister, at least in the history of India. Yeah. With that kind of a commitment, he doesn't have financial ambition. He doesn't have dynastical ambition. So the only thing is that he wants to die for the nation, you know. Now, with that kind of commitment, he's not looking at next 60 days or 100 days. He's looking at definitely the first 5 years, and then if he does well, he said, he will come and present his progress report after 5 years, so that you can reappraise and say whether you would like to give him another 5 years. But this is a dated mandate. Like Y2K came, Y2K realized in 96 that this trouble is there and it has to be sorted out in 4 years. Like that, he doesn't have unlimited time. He has just about 3-4 years or 5 years, but actually he has to start performing in 1.5 years. If he doesn't perform in 1.5 years, I think people will start losing patience. So my sense is this is one of the craziest kind of a situation where economy is, in any case, cyclically was to come up. It's almost at the bottom of the cycle, and you get, when you ask for 272 NDA, 272 plus NDA, you get 272 plus BJP. And that difference is not being understood fully. I mean, when this news came, it was 16th of May, and market was already at 7,200. So, and there is a difference between 272 NDA mandate and BJP is like huge. And it will unfold in the days to come. And you have seen in the in terms of cabinet distribution, in terms of I mean, every single act, they don't bother about what the, I mean, they're not that much bowing to the wishes of the other parties. Whether it came to whether to invite the Prime Minister from Sri Lanka or not, there was a lot of pressure whether to go ahead or not. So we can clearly see that these guys, they are out to deliver, you know, to their mandate. So my sense is it's a long mandate, and it will take time for anything to deliver. And I think these budgets keep coming and going. I mean, if you talk about receipts and payments, there is nothing much, in the sense that there's no tax mobilization of any significant order. It's a status quo kind of thing. There are some changes in some places here and there, but I don't think it's going to make, I mean, whether one should be interested in India or not just because of this budget. I don't think that's the differentiating. The issue is execution. And he is known for his excellent execution excellence. If UPA 2 has gone down, it is gone down for execution mess, or actually absence of execution. So when these guys are saying 37,000 crores will blow and build up 8,000 kilometers of road, I think by March it will be known whether they are doing it or not. So execution is the key, and I mean, if they excel in execution, which is what people have faith that these guys will execute, I also think that that's a possibility. And if you execute it well, then you are talking about say 6%. They themselves are saying 5.5%, 6% for the next year. I would think every year you must add up another percentage or so. So by the time it is 4th or 5th year, you should be looking at almost like a double-digit kind of thing. And when you execute well, like what happened in last 3 months of or 4 months of electioneering, when they thought, in Goa they said clearly our objective is to be 272 plus NDA. And what they got? 342. They got 272 plus BJP. So the issue is when the excellence of execution comes, you get what you cannot anticipate. You know. So I think we are in that possibility of execution excellence, and some returns which we don't know. I think we will build up as we go along, and the market will also test. People will also test whether the kind of faith they are reposing in this leadership, whether that is right or not. It is going to be tested every day. So I think we are in that expectations mood right now. But by the time it is next budget, I don't think they have time. They will get another chance to present a, what do you say, that we couldn't perform in last 12 months and let's give another try. I think you've seen what has happened to Aam Aadmi Party. It's a history. At least at this juncture, it is looking like a history because of one single mistake. So I think this government knows this particular political imperatives, and my sense is it's between now and 8 months hence for the next budget. And I think and it's not about this budget. I think they will do all the corrective measures in next 3, 4, 5 months to set it right. I mean, that's because I see these guys, they are listening. They are seeing what's really happening. And they are concerned about it. So I would remain very, very hopeful and still remain as optimistic as I was on, say, May 16th.
Naren, we have a Prime Minister who has a 12-year track record of performance already. You have reasonable history of what he did over this period of 12 years. And you just mentioned that their top priorities will be to get jobs, get growth, and bring down inflation. Beyond these priorities, which are very important and the primary focus of this government, what is it that you really expect, knowing the track record of this Prime Minister over the next 5 years' time, or importantly over the next 1 or 2 years' time?
I think the single biggest problem, if you ask me, in India is that we don't create supply.
Right.
We've not had a supply side government in almost right through this 25 years. I would imagine that finally we will have a supply side government, particularly where it is possible for the central government to do it. And once you have a supply side government, it will be what you see today in, let's say, broking firms or telecom. You have a consumer who has been taken care of. Because if you see what has happened to brokerage rates over the last 20 years, you can see what has happened to the supply side in broking firms. You take, for example, telecom, where the number of suppliers were substantially increased. I would expect that in the next 2 years, the government will work a lot in improving supply in many of the areas. And the moment supply increases in many of the areas, you have a very, very good experience. Like, for example, I think India will be one of the few countries in the world where there's something called a power cut. You need an inverter, you need a genset. Yeah. In my reading, the only problem that you're going to face at this point of time is that there is a central government and there are state governments. Each state government does not work in the same manner. But I think wherever a state government is also interested in development, I think in those state governments, I think power cuts will disappear. And if power cuts disappear, that is something we have not seen in post-independent India in most of the states in the country. So I think that's what I expect, but I expect some of the states to work hard to ensure that we don't improve. What those states will be, I don't know, because unfortunately a federal country like India is definitely 60% center and 40% state. If you take half the activities in anything, a lot of it involves state influence. And like I know of cases where hospitals have been constructed where permissions have not been given. I know of places where multiplexes have been constructed and permissions haven't been given for all frivolous reasons. So I think, if you're not going to be able to improve in these kind of matters, whatever Delhi does will not finally translate. Now my only hope is that you have a China model, where what happened was there were a few coastal states which first improved. And people saw those coastal states. And then based on those coastal states, you had a situation where the other states said, if we don't grow, we'll get left behind. And then they started to grow. The recent work, for example, in labor policy reform, which we saw in Rajasthan, was a development which I thought was a very, very positive development. Having said that, there are a number of states which are not NDA-led. So whether they will support the government in making India a great place in the next 5 years, that is my biggest question mark. And that is a question mark which I will not be able to answer today. As a citizen of India, I want all the states and the center to work with the objective that, why should you have power cuts? Is there any place in the world where you have such power cuts in the Western world? Nothing.
In fact, Naren, you made a very interesting point. A very small change in the competitive landscape of a business usually results in very dramatic changes in the profitability of that business, and even bigger changes in market capitalization. Having analyzed that, from a very, demand-led economy, you'd like this to be transformed into a supply-led economy. Does that throw up any exciting future businesses in your mind, or does that throw any of the businesses haywire in the future because of this prognosis?
I think a lot of things should happen, but obviously, like I mentioned, why should there be a big inverter business in India? Why should there be such a big genset business in India? I mean, why should real estate prices be the highest in the world, in the entire emerging market world? So I think there are a lot of cases where I think prices can come down. In fact, one of the basic principles I believe is that if you genuinely had a great government, both at the state and the center, I think interest rates will be 5% lower. Because why should, I mean, think about it. There is no country in the world which has today 9% bank fixed deposits for 1 year. In most of the countries, it is 0. Even if it were to drop down at 5%, it would be still one of the highest interest rates in the world. So I don't understand why we are not being able to create so much of supply. And if we create so much of supply, interest rates can be much, much lower. But, it requires, in some cases, municipal corporations, in some cases, state governments, it requires center. But I expect finally some kind of competition to emerge between states, between cities, which will finally lead to this thing. But I think a lot of it, and we have seen ourselves, like, over a period of time, our ability to forecast is pretty pathetic. And, I have always, and I learned it in 1989 when I was doing project finance in ICICI Limited. And I worked at that point of time for a short period of time in ICICI. But I followed up with all the companies where I had done appraisals for. I realized my failure in forecasting. So today, when we all forecast and we put numbers for 2019, they're all numbers actually based on our incapability to forecast. Yeah. So I think that will show up very drastically. Take, for example, 6 to 8 months back. If you had asked anyone in this room what will be the market in May, June, people have said 26,000. When the market touched 26,000, if people had asked what would happen in the next 2 weeks, they would have said 25,000. That's what happened. So I think our ability to, in my reading, I consider my capability to, incapable to forecast. But I can see that things are improving, and I hope competition comes. I think competition is the biggest elixir. You know that in every industry that you track and the industries that we live in also, competition keeps us awake and hence helps us to do the right thing. I hope competition between state governments start. Competition between municipal corporations start. If that happens, it will be great. Otherwise, you will have center doing a good job, but the final impact will be much smaller than what we think at this point of time.
Sure. With all the hazards of forecasting, Navneet, you talked about a fairly dramatic change that beholds us. What are your own forecasts for what could be the big opportunities, or what are the things that can fall by the wayside because of this big change that has just transpired 7 weeks ago?
So opportunities are more bottom up. So maybe the domestic cyclicals, because I believe that investment cycle is going to get revived. We talked about agriculture. We talked about, of course, there will be big changes in financial services and all. But those disruptive changes that you are looking at, how the things can change. Just 1 or 2 examples I'll give. I think the power of technology is witnessed in only few of the segments, and it's a very early stage, the number of smartphones that we have got and the internet penetration that we have. So we are seeing very early stage where companies, so those who have invested in departmental stores and all are witnessing competition from somebody, who didn't exist, and they're becoming much bigger in terms of their valuation. So in financial services, people haven't really realized the impact that technology can have in next several years. So my view is that this business will become more and more digitized and more commoditized. Your ability to scale up. So just a small example, Alibaba in China in last 6 months or probably 9 months got some multiple number of more mutual fund investors than what the industry got in last 25 years. That's the power of technology and what it can do. And Alibaba has no experience in managing mutual fund, and they just launched a money market fund, and they got some crores of new investors out of nowhere. So that's the power of technology, and it can disrupt the business in a fundamental manner. You look at the world, you look at Bitcoin, you look at crowdfunding, you look at the disintermediation. This business is going to be dramatically different in the next 5 years than what we know today. Look at the energy field. I'll just give one or two examples, and then you need to probably think aloud, and I'll take the Naren's point, difficult to forecast. I mean, we live in a world where the only certainty is uncertainty. But still, so let's say in energy, I think you look at Germany and all, they've got excess power because of the wind energy and the solar. The way the prices, I mean, the cost of production on the solar side is going up, and we have read so much that Mr. Modi has got a big vision in terms of, making India an energy sufficient country. If we are able to execute that well on solar, on wind, and tomorrow there could be some other technology also, you're looking at a very different balance sheet of India, because we are one of the largest importer of coal and such a large importer of crude oil. I mean, the nation's balance sheet changes, and then the whole business dynamics changes so dramatically. So the power of technology and some of these changes can have a very, very long-lasting impact.
Right, right. Raamdeo, you are mainly a bottom-up investor, but given this big change, any themes that come to your mind as exciting you a lot, things that you're working on, spending a lot more time, and which you think could be dramatic, over the next 2, 3, 4, 5 years point of time?
All the time we keep thinking about, new ideas, new companies, particularly new companies. I mean, which company has become relevant in a given point of time. Say, like, if you see yesterday's budget and the demographics you have, the level of housing penetration you have, the ambition of this government that they want to have houses for everybody by 2020 or 22. I think housing, I mean, what happens is that house making companies, there will be thousands of them. I mean, every city has 10, 15 of them in their own brands and local presence. But when it comes to housing finance, there are fewer, much fewer kind of companies, HFCs. Then when you go to buy the paints, I mean, among the aggregates, if you go to buy paints, there is one Asian Paint which is 60% and rest all are like, all put together is just about 15, 20%, 30%. So you have to look at the size of the opportunity. I mean, I am bottoms up, but when it comes to, I mean, by chance it goes to, if 60-70% also this objective is met in next 6 years, at least you will have a 6 years objective in investing. Yeah. What could happen to Asian Paint kind of a company, which is monopolistic, I mean, dominant player, and world's biggest housing boom, if at all it has to happen, it will happen on this soil. So, those kind of thoughts are coming to me, and I'm just trying to figure out, you don't pay some crazy amount of money for this kind of opportunity, because these are very well-known companies, and but as we go along, a lot of these things will come up very clearly. That one thing is very clear, that the kind of companies made multi-bagger money, I mean, multiple times of return in last bull run, would not be the company, because most of them are with a broken business model or very weakened balance sheet. Very few of them are kind of in a position to really take advantage of the next bull run. So what exactly is going to be what are the kind of companies which are going to be relevant and would be something which might be a little more expensive today, but for sure they're going to win. So those are things which are like the kind of thing I talked about, Asian Paints, or even more recently companies like United Spirits, which has gone through the change of management from a completely one type of management to completely different kind of management. Yeah. I mean, the change is like a day and night, right. So with that kind of change and almost 40-45% of the market under single belt, and the unfortunate part is they don't make any money, and that gives you an opportunity to evaluate the opportunity and value it in whatever way you want to value it. So those kind of things are coming to mind, and if this economy actually booms at 8-9%, I don't know what amount of celebration will happen in the evenings. So I mean, those kind of things are coming, And that actually gives me feeling that the companies which could have made about 15, 17%, 18% compounded, they could surprise us by making 25, 30% compounded.
Sure. So basically, companies with dominant market position, companies which can bet on this economic acceleration, whether it is paints, whether it is housing finance.
Yeah, and lots of them will come. I mean, I can think of 2, 3 of them. But as we go along, and people who are knowledgeable about how exactly businesses are going to shape up, because there will be different sets of businesses. And then on top of it, now we are almost on the verge of a huge explosion in online businesses. I mean, we are almost 8, 10 years behind in everything from China. Everything. Yeah. And in online, I think we might be almost 5, 6, 7 years behind. How, Navin, how old is this Alibaba phenomenon? I mean, I heard only 2, 3 years back. But when was it born?
So I think they got some, I mean, I don't remember the number correctly, but it's very high, some 20 crore or something, which is more than the entire mutual fund industry in the last 25 years.
Yeah,
that's just a money market fund.
Yeah, how old is the company?
Sorry? I don't know.
Alibaba,
Yahoo and all invested.
It must be 7, 8 years, isn't it? 10 years.
More than that, I think.
Because online concept itself is just about turn of the century. So what I'm saying is that in next 5, 6 years, we are going to see some dazzling business models and young entrepreneurs, brilliant entrepreneurs, IIT, IIM Ahmedabad, showing up their prowess in the global economy and local economy. Starting, see, good thing is everything starts with 400-500 crores kind of market cap. And then it goes to become 2 lakh crore, 3 lakh crore, and now 5 lakh crores. I mean, if TCS had 5 lakh crores, I think we should look for like 10 lakh crore kind of a company possibility, which will start from maybe 5-10,000 crores or maybe even lower. So I think the amount of money which will be made in this optimistic environment is, money will be made in any case, whether this government delivers. I mean, if this government delivers very well, then we have a chance of making, I mean, double or triple of what we would have made otherwise. Right. But money you will make in any case, from in this market in next 5-10 years. And not because of the governments. You will make despite the governments. Right. And we have made in last 25 years despite all kinds of coalition government. Yeah. Market is up from, I mean, when I started my career, it was about 500 points. Yeah. Today it is 25,000 points despite all the crazy governments you got. So you imagine if you get a terrific mandate now, you start with $300 billion of reserve, you start with a passionate guy who wants to prove himself in the next 5-10 years, and you have a country which has realized that enough is enough, let's give mandate to somebody. I think I'm looking at something which is going to be unprecedented for every single investor, every single company, and there if you buy it smartly to the business designs, honest management, good business design, and good management at reasonable price, I think, I mean, one can make some serious amount of money.
Sure. Naren, we saw very stark divergence in performances, in various sectoral performances. For instance, if you look at the performance of the consumer sector, leave out the last 1 year, but the 5 years preceding that, and compare that to the capital goods sector, and then go back another 5 years and look at how capital goods perform versus consumer. How would you position yourself in this new era? You talked about acceleration in growth. You talked about fall in interest rates. How do you put all of that together in terms of your own, preferences or overweights in terms of sectors, and also, where you would, avoid or, underweight sectors?
So actually, we believe a lot in cycles. So, okay. What we have seen, if you see the 98 to 2000, there was a technology cycle. Then after that, there was a good interest rate drop cycle between 2000 and 2003. Then after that, you had a good mid-cap cycle followed by an infrastructure cycle. Then after that, you had a consumption cycle. So my reading is that the last cycle will not normally be the next cycle. So right. It can't be again the consumption cycle. Right. So, normally at the end of any cycle, you will see some bizarre things happening. So for example, there have been cases in 2012 where a franchise owner of an American company got traded at some 100p or 400p or something like that. Yeah. And if you go back to 2007, there was a valuation of some power utilities based on 2014 or 15 valuation. So that normally detects the top of a cycle, madness. And today I think we are at the start back of the infrastructure cycle. And in my opinion, we could also be at the start of an interest rate drop cycle. So I would say between these two, these would be the two cycles that I believe in. See, where you make your money in stocks sometimes can be more difficult to understand, and that's where Raamdeo points out that sometimes, you can make money in a more simpler business, which is much better quality. And as he pointed out just before our meeting, no one has ever made an airline. Still, again and again, people start airline industry. So somewhere, there are businesses where you make money. So you might, infrastructure may be a big cycle. But will it be such a good business model as consumption was? The answer is no. So, you will have a situation where there'll be, so if you ask me at this point of time, what is it we are betting on in our portfolio? We are betting on banking at this point of time. For a long period of time, we were not for it. But now we are saying, okay, the economy is improving. And what we have seen is when industrial production growth is 0, you have certain non-performing loans. If the industrial production growth becomes 10%, like I expect, many of the non-performing loans will become performing loans. So then the NPL cycle changes, then you can make a lot of money in banks. So banks is something which we like as a sector. The second sector, which, I like to look for contrarian sectors. And unfortunately, I must agree that telecom has not made money for most people over a long period of time. But when I look at it today, for 6 years, it hasn't made money. And the players who are not strong, they are getting weaker and weaker by the day. And I see a fair amount of, irritation with that sector. And I like sectors which actually don't work for 5-6 years. And over a period of time, I found that, the last person standing comes and sells the stock to you, and then you can make big money. And so with that value, with that point of view, I believe that telecom is another interesting sector. So basically what we've been thinking thematically, we like infrastructure, banking and mid-caps at this point of time. But where I believe is that these are all, you have to be patient, like Raamdeo is. You have to be willing to be invest. You shouldn't look at what happened this week. You have to be willing to really look 3 year, not look what happens in the month of July or August, and look at it from a 3-year view.
Being contrarian is never easy. Navneet, you want to try your hand at that as well?
So definitely, one thing is that the cycles are getting shorter. So we talked about a couple of months back about the industrials, but the way they have run up. At the same time, I think there are opportunities across the board. So it's important to have that size of opportunity thing, where that next big opportunity could be, as Raamdeo ji said. But he also mentioned that, but within that opportunity, I think you have to look at the individual, that characteristic of that business and that company. So maybe telecom from 100 million subscribers to 900 million subscribers, who made the money? It was the government, it was the equipment suppliers, and it was the consumer. The companies didn't make money. And that could happen with some of those large opportunities which can happen. So I think it's more important to have that bottom up. So when I look at, obviously, if I'm going to create 100 new cities, or whether we build ports or airports or roads or whatever, I think materials is going to be one. We're going to look at massive amount of construction capability that you need. I think manufacturing exports is going to be a very big opportunity for India. I think several of the Indian companies are really positioned to take advantage of that, which I call the next global boom in physical infrastructure, which we are going to see. I think even in technology field, as you rightly mentioned, I think there are lots of companies, there are still lots of new things that are happening. So whether it's cloud, whether it's, the data, the big data, whether in terms of infrastructure management, I think there's still a lot of opportunity in technology left for India. In healthcare, so I think our own, the India's per capita expenditure is so low, so I think there are lots of companies will make a lot of money that, that industry hasn't grown on the domestic formulation side. There would be opportunities on that. And when I think that, the 100 new cities and, there's lot much more of real estate getting built up, obviously you'll need more automobiles, you'll need more building materials. And of course, if we are going to create so many new jobs in a country of like 120 crore people, it was the NREGA, which probably we saw the impact on the staples, but across the board, different kinds of discretionary consumption, if you are going to create more jobs and incomes are going to grow, So there are going to be so many opportunities. So we had a small period where it was tough to get those 35, 50 stocks, and you had few sectors. But I think today you will have a problem of plenty, because in a portfolio you only want 30 and you have 60 ideas.
Sure, sure. Interesting. Raamdeo, what would you advise the investors in this era? I mean, we are all excited about economic growth improving, corporate earnings improving. You have no depth of ideas, as Navneet is talking about. You have a cyclical upturn that Naren talked about. What would be your advice to investors? Often volatility in the markets, this fascination to time the markets, and this whole putting loads of money in 2008 to 10 and then withdrawing loads of money from 2012 to 14. What would be your piece of advice to them, because this doesn't seem to be a very sensible proposition if implemented in the manner it has been in the past for them, right?
Yeah. Everybody's style. I mean, it takes time to. It takes almost 20-25 years to develop a style which you can depend upon. And I have realized in almost 35 years of my investing that the best thing to invest in is the Indian entrepreneurship. Fundamentally in entrepreneurship, because this is one commodity or this is one trait which is most expandable and most productive. I mean, you see from where, say, Infosys started, in a garage, completely, I mean, even $100, $200 were big thing, even till as late as early 90s. I mean, 91, 92, they used to be coming here for a few $1,000s, RBI permission to go to US and those kind of things. So from those, I mean, their IPO itself was a flop IPO of 200 crores. Today, this company is 2 lakh crores. And they must have distributed at least 15 to 20,000 crores by way of dividends so far. Maybe, I don't have the numbers, but it must be at least in that order. And today they are distributing 3,000-4,000 crores every year, which we are not happy with. They should be distributing at least 6,000-7,000 crores. So this is the power of one successful enterprise. And I'm not talking about one. Look at ITC. In 1988, you could buy the entire ITC for 120 crores. Today it is 2,50,000 crores. It has earned 46,000 crores. It has paid out 23,000 crores by way of dividend. And there are story after story. HDFC, in 1978, they took 10 crores. Today it has given birth to, one HDFC has given birth to one HDFC bank. It has given birth to the most respected insurance company, largest mutual fund company. And I mean, they are paying out like thousands of crores of dividend across. And they are worth maybe 2-3 lakh crores as a group. So the entrepreneurship has been the biggest opportunity to invest in. I mean, if you invest at one stage and if you stay on for 10, 15, 20 years, of course you don't get right everything. But out of 10, if you get one right, that one will pay for all the sins of 9. Because out of, say, 100 rupees, you have 90 rupees put in 9, 10 rupees each, and 1 10 which is right. The 10 can go 1,000 times, whereas 90 can go only to 0. This logic is so clear, and there are so many people here who have made money like that by doing nothing. They have 200 shares, 300 company shares, and that 1 or 2 shares, that 200 Hindustan Lever in 1980, 300 shares in Colgate in 1982, or dad bought 100 shares of Wipro and forgot it. I think that has made them maximum money. And the guys who have been trading every day in, day out, I think they are nowhere. So I think betting your dollars onto Indian entrepreneurship, and the best of entrepreneurship is yet to start, let me tell you. The funny part is that we think that one Hero Honda is gone, one HDFC Bank is gone, or one ITC is gone. I think we have seen only a trailer of the amount of money which is going to be made in the future, in terms of ideas, in terms of size of the money. We are living the exponential times. This is just about the start of the exponential times. And this mandate is only an enhancer to the pace at which, in any case, you are supposed to make create the wealth. So I would think this in this environment, not only in India, and the whole thing is becoming so global. As we go along, in next 5-10 years, the opportunities will become so much more global. I mean, you don't have to bet only on Indian entrepreneurship. You can bet on the global entrepreneurship. You know, you can buy in India, under Motilal Oswal, you can buy Nasdaq ETF. You pay rupee and you get Nasdaq this thing. You're betting on the global innovation-led entrepreneurship. So I think the opportunity is to buy into entrepreneurship. The only issue is that at times we get scared of fluctuations in the market and we become very short-termist, very scared. But I would say in today's condition, if you are scared of 10% fall, you are missing on hundreds and thousands of % of gain in next 5-10 years.
Interesting. Naren, your piece of advice to the investors, particularly what not to do?
What not to do is most simple. I have seen, I spent 10 years as a broker between 1994 and 2004. And I watched what has happened after 2004 is not to trade derivatives.
Yeah.
That is, in my opinion, that's the single piece of advice I can give any investor. The second is, if you're doing direct equity, you have to do your homework. And if you believe that making money in direct equity is too easy, it is not correct. You have to be willing to do homework. You have to be willing to do a process like an exam, and you have to follow it rigorously. If you do that, you can make a lot of money. People think that they can trade in equities very easily through, and they can cure this cover, that cover, and make money.
Yeah.
I don't think that is true. Yeah. As far as mutual fund is concerned, genuinely practice asset allocation.
Right.
And normally my view is, don't invest in an asset class which is given too much money at a point of time. At least be a bit more cautious there.
Yeah.
These are some of the principles which I have found useful over a period of time.
So you continue to be contrarian even in that aspect.
Yeah.
Navneet, turning to you, you run a lot of mutual funds, within the SBI MF umbrella. If you were to pick one or two and recommend that to our investors here, what would you recommend?
So I mentioned that in the last 5 years have been the most challenging. We had a period where the growth was very low. We had a very high inflation. We had challenges with the politics and the corporate profitability, so on and so forth. And during this period, some of our funds and then some of the other funds as well have delivered 25% CAGR, and then some of them actually even more. And those are like purely bottom-up stock picking. So we have a fund like Magnum Global where we invest in companies which have a sustainable competitive advantage, very defined competitive advantage, where there's a 20% ROE and then 20% growth. Obviously, you have to pay a little higher in terms of valuation, but I think the formula works over a longer period. It may not work in a short period like a momentum market last few months, but it'll definitely work over a longer term. It has worked on an emerging business fund that we run where we buy, across market cap, pure bottom-up, benchmark agnostic, and the sector agnostic. I think some of these funds, if you have a long-term view, just put your money 5-year, 10-year, 20-year, 30-year, and just sit on it. And you look at the portfolio, and I think you'll get that confidence that, one needs to have that kind of portfolio.
Sure. Naren, what about you? You talked about betting on cycles. Which of your funds would you recommend to the investors here?
At this point of time, what we've been believing is that the market valuations are fair. And therefore, maybe categories like balanced advantage, for example, we have a very defensive fund. That kind of fund is something which we really like at this point of time. Along with, we believe that, markets would be volatile, and therefore strategies where you're likely to make money because of the volatility which is there in the market. While the market may be upward oriented, like our dynamic plan, and are something we like on a regular basis. Thematically, as I mentioned, it is infrastructure, banking, and mid-cap, which we like from a 3-year basis. But people should really look point to point and not look at this week. If they looked at this week, they would not invest in the most aggressive sectors. They would only choose something else. So these are the things we like at this point.
And Raamdeo, which of your products would you like to recommend?
Actually, in India, one of the good things is that people love to touch and feel their stocks.
Yeah.
So
even without doing the homework, as Naren mentioned.
Yeah, so you can buy you can buy large cap value strategy which has 10-year track record. You can buy uh, mid cap strategy, and if you're not happy with the same trick, I mean we are one pony trick. We buy quality. We run a very focused strategy, 15 plus minus kind of stocks.
Yeah.
Maximum 20 stocks in the portfolios, and very high quality. We don't carry any cash. It's always 100% invested, and it's not it's a the investment theory is called QGLP, quality growth longevity at reasonable price. So we practice it absolutely to the core. So you can hold us responsible for whether we have practiced the dharma or not. But the performance is for anybody. We are not running away from performance. Performance is good, but when you buy something, you buy it for the future. You have to more than the performance, it is the process which is important. So I think all the focus strategy, F25, F30, F35, large cap, mid cap, and multi cap. I think these are 5 products we have. I think one can choose and buy anything.
While some of my other panelists have constraints on talking about stocks, if you were to give 1 or 2 ideas to our group here, what would you recommend?
No, I think we have already talked about ideas in between the discussion.
Yeah.
So I think we'll stick to that.
We'll stick to that. Okay, great. Thank you all very much for taking the time today for this panel discussion. Thank you very much.
Thank you.
Thank you. Okay.
Thank you so much, all of you. I think it's been an extremely enriching evening with some serious amount of conversation and extremely useful stuff that I think all of us want to take back homes to our respective homes. We can take a few questions. So if there are any of you who'd like to ask a few questions, maybe you can just raise your hands. I have my colleagues in various corners who can assist you with a microphone. Okay, so there's someone here. So Akhil, can you just come in the front here? Here, on the first table.
Hi, thank you for inviting us today in my company. I have a question for Naren, and I was very impressed when you said, we are very poor at predicting, and you kind of, I can't use the word divided, but you talked of center and state. Now, my question is slightly connected to that Modi has really impressed in Gujarat. My concern is what worked for Gujarat may not work for the nation. And as humans, we have a policy to apply the same principle of success, which has been successful in one area. India is very uniquely divided when you go to east and north and south. We are divided by religion, culture, language, the culture of investment, the culture towards working. So I would like to have your viewpoint on these 2 areas that I kind of spoke of. Thank you.
Sometimes we all think we have to do something very different. If you take the case of value investing, and Raamdeo will explain to you that basically whatever value investing style that was created by Benjamin Graham and later modified by different people, that has worked in almost all the countries in the world. And if you take in India, I remember in 2007 being asked a question, will value investing work in a growth market? And at that point of time, value investing was going through a temporary problem, I would say. So I said, no, what I can see from whatever I have read is it will work in all markets, including non-growth markets like India. So finally, the 10-year experience has been very good for value investing. So like that, if you follow a certain process and you actually use that process, you can be successful even if there are some variations. But having said that, now what Mr. Modi is, as the Prime Minister, can change at this point of time is only central government working. He cannot change the working of all the state governments. So I think that problem, so if people attribute what is the success Mr. Modi does for the central government is how we need to look at it. What he does to state governments, is not under his control beyond a point, because it is not feasible. So I think, so I believe that it would be possible that, and I've seen over a period of time repeatable processes work. There's a very interesting book written by a person called Atul Gawande on checklist manifesto. That book says if you use a simple one-page checklist for most of your work, it reduces a number of errors. For example, a single-page checklist apparently reduced the number of mistakes in the operating theater by about 30–40%, and allowed a plane to land smoothly in the river in New York instead of crashing. So I think, I believe that if you follow processes, which I believe Mr. Modi will be following, a lot of the success that was seen in Gujarat will happen to the central government. But for India to improve beyond a point, we need to see improvement in central government, state government, municipal corporations, or panchayats, as the case may be.
Who's next?
We are all very optimistic about the market, but we also have to see what can go wrong. And we all hope that India will achieve what we expect Mr. Modi to achieve. So I would like to hear panel's view on that.
Maybe Navin, you can request someone to speak.
There are a couple of things that can go wrong. So actually, unfortunately, the problem is that our investors in India have always been trying what can go wrong for the last 5 years, while the foreigners have been putting money continuously and making money, because they are only looking at what can go right with this country. But that apart, I think there are a couple of things. So one, from the global side, I think the risk is more from the outside India than inside India. So maybe a geopolitical risk, because in the last 20–30 years, every time you bet against the geopolitical risk, you made money, because whether something happened in North Korea or Iraq or Ukraine or Egypt, immediately markets recovered and volatility remained low, because nothing has actually spiraled or nothing actually blew out of proportion. But anytime something is happening in Israel, something is happening in Iraq, somewhere else, or a big, I think a blow up in China, I mean, it may happen, may not happen, but these are the left-tail risks that you need to keep in back of your mind. I think that is a bigger risk than something going wrong here. In terms of India, I think, of course, the very near-term challenge of the monsoon being very poor, but of course, I think the two ways of looking at it, that I think historically we have been, doing more band-aid kind of solution, but I just hope that with this government, I think they will look at more structural solution, that how do we ensure that we really improve the agricultural productivity, we reduce our reliance on more energy imports from outside India, and how do we work on more structural issues. But to me, I think the bigger risk is outside. I think here, knowing the track record of the government, the commitment that they have shown, I think they'll be able to deliver. But of course, execution is always a big challenge.
Thank you, Navneet. Clearly, this corner of the room seems to have heard the most.
Thank you. Good evening to everyone. We talked about infrastructure. There is a great positive attitude, infrastructure, banking. I'm in automotive sector. I would like to know what could be the future of automotive sector in this country, which can be very huge. I don't think, except saying that manufacturing export will improve, any one of you touch the automotive sector. So I would like to know what will happen on automotive sector, sir. Thank you.
Should I? Yeah. So, like banking, automotive is also going to be a very large opportunity for domestic consumption as well as for exports. And here, as the price of the vehicles go up from two-wheeler to four-wheeler to SUV to trucks, the cyclicality keeps increasing. At a two-wheeler level, it's almost an FMCG, slightly more consumer durable, 40–50,000 rupees. So it doesn't have that deep a cycle. But when you talk about a truck of say 40–50 lakhs or 70 lakhs, I think you have a very deep cycle. Nobody buys one single truck extra if it is not required. So I think the good thing about automotive industry structure in India is that in every segment you have one dominant player. If you look at the tractors, almost 45–50% is catered by Mahindra & Mahindra. If you look at SUV, again Mahindra. Look at trucks, 60% is with the Trelco, and then rest all are 15, 5, 10. Look at two-wheelers, which is largest, kind of amongst the largest in the world. You have 42% with Hero, you have 20% with Bajaj, and another 10-15% with this Honda, and same amount with TVS. So just about 4 players. So I think this is a very, very interesting and very good structure in a growing environment to make money. So since the automobile penetration in India per se is very low, like we are talking about just about 10 million cars, total 10 or maybe 15 million cars on the road today for a 1200 million people. So I think you can keep making cars for the next century and still you're not done. That kind of growth potential is there. Because in US for 300 million people, you have 160 million cars. So we cannot dream of US, but the same story like in China, in 1998, China was making as much car as India, or probably India was making a little more cars. Today China makes 20 million cars and it's still growing. We make about 2.5 million cars. So that's the kind of potential you have, whether it is two-wheeler, whether it is four-wheeler, whether it is trucks. I think the scale is almost like that. So we have to look at China, what is possibility in automobiles. But the difference between China and India is the industry structure here is very, very suitable for making money because it's a duopoly or triopoly.
Thank you, sir. Anybody else? All right, so, yes, Akhil here in the center.
Good morning. I wholeheartedly agree with the panel, but there is one big question. In today's world, we can't be insulated from the other countries, their economic things and all. I talked to a few stalwarts, hedge fund stalwarts, who are very bearish. And as Navin told us earlier, most of the companies have greater holding with the foreigners. So if something goes wrong there and they decide to take the money out, where do we stand? This question is for the whole panel, especially to Navin because he was the one who brought it up.
That and take it forward from there.
Yeah, I think number one, you have to decide whether you're a trader, you're an investor, or you're trying to make money over a few days. In my reading, as I mentioned, anyone who's tried to be a trader has hardly made money. Otherwise, they get into insider trading allegations, and some of them have all gone to jail or had to retire. But if you take FII selling, for example, in the last 15 years, there were 2 years where they sold very aggressively. One was in 1998 and second was in 2008. And those were the 2 best years to buy equities in India for the long term. In fact, in both the cases, you made huge money in the years where FIS sold very, very heavily. So I think if you are an investor, the opportunity that something goes wrong in Ukraine or some other country due to which there is huge selling by FIS should be seen as an opportunity, unless you are a derivative trader. So I would say that, I view all global problems resulting into which there is selling in India as a continuing opportunity to buy, and I don't worry about it.
Sorry, I beg to differ with you, sir. The thing is, you are talking of long-term. I am a long-term investor. I hold Infosys from the beginning, all the shares, I still hold them the way they were. So I consider myself a really long-term investor. But something happening, which may happen if they decide, and there are a lot of indications that one day it may happen, not later, but sooner. because of lot of policies being like interest rates and all in US. So all these do make a lot of difference. And as Navin appraised us, that majority of the stake is with those FIIs. One small run on their funds there will force their hands in spite of their knowing that they will make money in the long run. And then the prices, if they are forced, then they have to take the money out. We, as majority of our holding are with them, we are left with no option but to make the market come down. The market comes down very fast. You are saying if you are a long-term investor, you may not lose money. No, it doesn't happen because you have to have that kind of resources to back you up. When the prices go down, your resources may not be good enough for that. So I don't agree on this point that only short-term traders are at stake, no.
I think you have answered it. If you look at Infosys, I think between 2000 and 2002, the share went down, I think 60–70%. Then again in 2008–9, I remember the share went down about 60%, 85%. So frankly, if you look at your own experience with Infosys share over the last 15 years, you have had at least 2 experiences where the share fell 60–70%, but subsequently they recovered. And as a long-term investor in Infosys, your paper wealth on Infosys share has fluctuated very, very substantially. But in the very long run, you have made money. So during the period, suppose you wanted to sell your share on 2008 October or 2009 March 7th, you were definitely a loser. Since you have held the share after 2009 7th March till today, you have been a big gainer. I think Navin will add.
I'd just like to add to, so we travel all over the world to meet with investors, and we've been doing that consistently over the last 15 years. And I'm happy to share with you that the diversity of investors, foreign investors who are investing in India, has dramatically increased. Once upon a time, you used to have India dedicated funds who predominantly used to invest in India. Then you started having global emerging market funds who started allocating into India. Okay, after that you started having sovereign funds, pension funds, hedge funds who came to India, exchange traded funds. So the diversity of the pool of funds that are being invested in India today is more than it has ever been. And most of these investors have different objectives. So for instance, an endowment may have an objective to meet with its endowment related commitments. A global emerging market fund may have an objective to outperform the global emerging markets. Some of the hedge funds may have an absolute return mandate. An India dedicated fund may stay invested in India irrespective of the ups and downs. So the diversity of the investors has increased dramatically. To top that, now you recently saw a Canadian pension plan investing 2,000 crores into L&T. So those are very, very long-term pools of capital. So even if you were to see some run on the Indian markets because of interest rates in US rising, some sell-off in global equities, today you have multiple different pools of money that have come to India, and you are unlikely to see all of this, rushing for the exit doors, in our view. Having said that, as Naren rightly pointed out, you've already seen big drawdowns in your Infosys holding. An investor can always see big drawdowns in his portfolio and has to be mentally prepared, for some of those. None of our assurances can hold you back from a drawdown. Yeah?
Thank you, Navin. I think it makes more sense.
So just
hello.
Yeah.
Let me attempt another answer. What you are asking is somewhat hypothetical, but it's not a zero probability. It's a low probability, but yes, it's a 1%. I would think 1 or 2%, but yes, let's talk about it. See, in 1992, there were no foreign investors. And we saw the craziest bull run in this market in 1992 under Harshad Mehta. So don't forget the power of domestic investors. They are they're on the sidelines. Only 1%, this is the least penetrated kind of a market. Only 1% are here. You drop the market by 50%, and you see every single person will be in the market. Every single guy will be there. They will sell the houses and buy stocks. See, the point is, there is a value in everything. And at some point of time, the domestic investors will come out. I remember when the deep discount bonds came in 1992, or when did it come? The IDBI deep discount bond, I think in turn of the century, I think, is it?
97, 98.
97, 98. That time, at I think 12% compounded or something was there. And it was almost impossible to see how they can get 1,000 crores or all. And they got as much they wanted. It got oversubscribed multiple times. So I think we must have faith that if stocks are reasonably priced, businesses are reasonably priced, there are going to be multiple numbers of buyers coming from the domestic market itself, apart from some other country also. So I would not be that much under the threat of, unless we do some crazy thing in the country, that every single guy in next 24 hours, they are thrown out, like what we did with the FERA or something, where we said, no foreigners are allowed to stay in this country. Colgate, you get out. Coca-Cola, you get out. IBM, you get out. If you do that kind of thing, if FIs are not allowed to enter this market and we, as a nation, we don't want them, I think those are a very, different kind of situation.
Thank you, sir. I think we'll take the last question if there is anybody.
Please.
Oh, it's back to the same corner.
We are not cornering. We are just trying to put across our views. Which is the sector which is going to give the growth of the GDP in the coming 5 years?
So who would like to answer this?
GDP, I think the investment share has to increase, the manufacturing has to increase substantially compared to where we are today. Anything else that you want to add?
I think infrastructure investment then.
So did that answer the question that you were asking? Yes. All right. So ladies and gentlemen, thank you so much for a wonderful evening. The bar opens that side and the food on this side. Thank you so much, panelists, for all your time and all the wonderful words that you shared with us. Have a good evening. Just for 1 second, may I request Raamdeo ji to please allow us for a small felicitation for our two guests. Raamdeo ji, can we please have you hand over a small token of our appreciation to Mr. Naren? Naren, this is for you. And this is our appreciation for you, Navneet. Thank you so much for spending time with us. Thank you so much.